Hello everyone, and welcome back to another training video. In today's video, we're going to be talking about trend lines. So previously we discussed market structure, then we looked at support resistance, and now we're going to see a little bit about trend lines. So what are trend lines? We'll look at the different types of trend lines in terms of obviously different types of trends, and then we'll see some useful tips that could help us at least use and draw them properly. Now, trend lines. Now, the trend line itself is actually one of the most widely used technical analysis tool, right? One of the widely used tools that technical analysis use. You can find it on your MT4, be it on your mobile version, or your desktop version, on TradingView, or any other trading platform. Trading platform basically. So trend lines, you think of them like support and resistance, but instead of drawing them diagonally, so instead of drawing them horizontally, you draw them diagonally, right? Now, when support and resistance, we draw them, we look for previous areas where price has rejected or bounced away from, and then we draw lines to watch for what price will do in the future when it gets there. But trend line serves as support and resistance, or support or resistance, but dynamic. So it's not flat. So rather than looking at the past business performance or other fundamental market news, technical analysis look to trend. So remember, we all talked about trending. We, as traders, we look to make trading decisions based on what the market is doing, whether it's trending higher or trending lower, and vice versa. So here's what it looks like, right? So in an uptrend, when price is making higher highs and higher lows, sometimes, and here's the key word, sometimes you would find that the market would lay out a trend, would stay at an angle where if you connect it, you might be able to spot tradable opportunities. So what I mean is this, right? So note here, right? At this point, the market bounced, right? Made a high, made a higher low, then made a higher high. And again, came back and bounced. Now, what you notice is when you connect this low to this low in an uptrend, so when market is pushing higher, well, we draw our trend line, at the lows. So in an uptrend, we draw our trend lines at the lows. And what we're doing is we want to see how price reacts whenever it comes back to this trend line, right? So in an uptrend, we draw our trend lines below, it's going to serve as support. And in a downtrend where price is making lower lows and lower highs, lower lows and lower highs, we draw a trend line, up above price, and it's in this case serving as potential resistance. Now, trend line gets broken just as support and resistance get broken, and it could serve as the opposite in the other direction. Now, a trend line is basically a straight line that connects at least 2 points and extends into the future. So here's the key point. It's connected at least 2 points, and then we draw it extends into the future so that we see what happens the next time price gets to that point. Now, trend line connects significant lows in an uptrend, and they connect significant highs in a downtrend, creating somewhat of a dynamic resistance or support, right? Now, in the matter of dynamic resistance, what it means is just as price changes over a period of time, this is, price doesn't always go back to retest the previous high or the previous low. No, sometimes it doesn't get there. It would go at an angle, right? And you find this happen over and over and over again, right? It's not always the case, and sometimes they're not exactly right, but you would find this progress happen over and over again in the market. So, for example, like I mentioned, in an uptrend, the level of support goes up as time progresses, and then in the downtrend, the level of resistance goes down as time progresses. Now, in an uptrend, right? An uptrend line, basically, an uptrend, so this is supposed to be one word. An uptrend line has a positive slope. Now, big grammar. Basically, the point is, as price is making higher highs and higher lows and higher highs and higher lows, we connect the low and then wait to see what price would do in the future, similar to something like this, right? So price is making higher highs and higher lows and higher highs and higher lows. Now, as long as price, anytime what we're doing is waiting to see what happens the next time price comes down to the trend line and see if we find an opportunity to do what? Well, to buy. Why are we buying? Because the market structure is bullish. You get the drill, right? Now, Here's an example of a trend line, right? Or, of an uptrend and a trend line at work. You could see here that, well, there was market bounce from here, came back, bounce from here, came back, bounce. So at this point, after 1, 2, maybe you can consider this too as just one touch, but let's say after 1, 2, you draw your trend line. And what are we doing? We are just waiting to see how price would react to it. Now, if this place holds, what it means is in the future, when price come back to this trend line, we could start to look for potential buy opportunity. So remember before, in one of our previous training on support and resistance, and we show some examples. Well, we would have looked at this area because it's an uptrend. We'll look at an area like this as potential area to buy from, an area like maybe this as a potential area to buy from. But now trend line now adds another potential area to watch for as to whether price would continue in the trend. But remember, we're using it in favor of market structure. Now, how do we draw trend line properly? Now, you need at least a minimum of 2 swing lows or 2 lows that are higher than, so the current low should be higher than the previous low, and then you draw your trend line. So something like this. Let's say price starts from here. So price goes from a low, right, to a high. So price goes from a low to a high. So we can see this, the market is an uptrend. So the market is in an uptrend, has made a low, made a high, made a higher low, and then made a higher high. What do? Well, we draw our trend line and watch to see what happens the next time price approaches it. Now, it's not always going to be respected, which is why we need confirmation. Don't worry, when we look at price action, candlestick setups, you can now start to use that as confirmation in your trading. So price goes from a low to a high, right? We draw our trend lines. And now what do? We watch to see what price do when price comes back to this area. So you see, it requires lots of patience. It might take time. It might never even come back down here anytime soon. But let's say price comes back down here. We watch for confirmation because the market is bullish and we're looking for buying opportunity, and price push up. So we look for buying opportunity based on this trend line. Now, we need 2 touches or 2 lows to draw a trend line, but we need 3 rejections from that low. So 1, 2, 3 for it to actually become valid. So that means the next time price comes back down here, we start to look for opportunity to buy. You could actually start to look for opportunity to buy here, but 2 is not enough, right? 3 is better because it shows that, okay, well, this is, it's going to hold. And then we start to look for opportunity to buy, and hopefully, potentially, if we do the right thing and look for the right confirmation, and even if you do all of those, you could still be wrong, which is fine. But more often than not, if you do the right thing and you draw your trend line properly and you're applying the right type of setups, you find that areas like this tend to hold, right? So that's basically how you draw an uptrend. So this is about an uptrend. Now let's look at the downtrend. Now a downtrend line, similarly to the uptrend, is just, the market is moving at an angle, and then we draw a line to connect and watch to see how that level reacts to hold price. But in this case, the level will be acting as resistance, because remember, based on our market structure lesson, we want to trade in the direction of the trend or in the direction of the structure of the market. So in the downtrend, it's have a negative slope drawn by connecting the high. So if you look something like this, where price is moving lower, and we can find an angle where the market seems to respect. Not always going to be perfect, but not always. And just because the market breaks the trend line doesn't necessarily mean that the trend has changed. Remember, the structure is based on the high and lows, not on the trend line. But the trend line can sometimes give us very good setups to get involved. Somewhere you will see some example. Now, this is an example of a bearish trend where you see price went from, you could see we have the first touch, the second touch, we draw a trend line and see how the market reacted. In this case, we just had this one touch where price pushed away from it. Didn't really, similar to support and resistance, don't think of it as exact levels. Think of it as a zone, right? And sometimes it's hold. In this case, it breaks and it becomes the opposite, right? So how do we draw a downtrend line? Similar to the way we draw an uptrend line, price goes from a high to a low, makes a lower high and makes a lower low. At this point, what do? we draw our trend line, right? And then we watch to see how price would react when it comes back to our trend line. And if we get confirmation, we can actually get involved selling, and then look for the same thing. We can look to repeat this process over and over again until that level fails, right? So that's basically how we look to apply the concept of trend line, which is just basically dynamic support and resistance. So let's quickly look at some useful tips before we jump over to our charts and just see if we can spot something. Okay. Now, useful tip. Point one. It takes at least 2 top support zones to draw a valid trend line. That means you need 2 touch. If the market is bearish, you're looking for 2 highs that are lower, lower highs, and then connect the trend line and watch for the touch. But then it takes a third one to confirm the trend line. Now, the next point is the steeper the trend line you draw, the less reliable it is, and the higher chance, the higher probability that it's going to be broken. Now, here's what I mean. If a trend line looks like this, right? So let me get my pen. If a trend line, if the angle is something like this, and then we draw a trend line that looks something like this, well, there's a good chance this would break because it's too steep, right? As opposed to if there is a very good angle between it, and then, this is most likely going to hold. There's not most likely, but if it's too steep, that means you find a trend line that is just so almost straight like this. It's not as, what I say, yeah, it could hold and you could trade that, but it's not as strong as a trend line that is at a favorable angle, right? There's no right or wrong angle. It's just the steeper the trend line, the less reliable it is, and the higher probability that it's going to break. Now, the next point there is that similar to support and resistance, right? A trend line becomes stronger the more times they are tested. So if a trend line has held in the past for multiple touches, well, that trend line is quite valid, and well, anytime market gets to it, something is going to happen. It's either going to break above it and then move, or reject it and continue in the direction. So you can start looking at those areas for potential trade setups. And then most importantly, do not ever draw a trend line. Don't force a line to connect. Like if you draw it and it doesn't, like if you're looking at it, don't try and force it. Oh, there's a trend line here, there's a trend line here, there's a trend line here. If it doesn't fit just right, then it's not probably going to be valid. So let's go over to our charts and see some examples.